Welcome back to the show. You're tuned into the Forex market update and forecast, your go-to source for market analysis and predictions to help you stay ahead of the game. Today is March 23, 2025, and we're diving into the key developments shaping the Forex market, along with what you need to know for the next workday. If you're serious about trading, stick around because we have plenty to cover. Let's start by breaking down what happened on the last trading day, Friday, March 21st. It was a volatile session, with major currency pairs reacting to a mix of economic data, central bank signals, and geopolitical developments. USD performance, the US dollar index, DXY, saw moderate gains, closing around 104.85. A stronger-than-expected PMI report and hawkish comments from Federal Reserve officials kept the dollar supported. The market is still speculating on the timing of rate cuts, but with inflation concerns lingering, expectations for a June cut remain uncertain. Euro to US dollar, the euro struggled against the dollar, closing near 1.0780. The Eurozone's manufacturing PMI disappointed, reinforcing concerns about slowing economic momentum. The ECB's Christine Lagarde reiterated the central bank's cautious approach toward rate cuts, which added to the euro's pressure. Pound sterling to US dollar, the British pound slipped to 1.2625, driven by weaker-than-expected UK retail sales data. Investors are also watching the Bank of England, as mixed economic signals make it harder to predict their next move. US dollar to Japanese yen, the yen weakened further, reaching 151.40 against the dollar. Traders are watching the Bank of Japan closely after recent speculation about a shift in their yield curve control policy. A potential intervention by Japanese authorities is on the radar if the yen depreciates too much. Commodity currencies, the Australian dollar to US dollar, dipped to 0.6560, weighed down by risk-off sentiment and softer commodity prices. Meanwhile, the Canadian dollar, US dollar to Canadian dollar, remains stable around 1.3570, with oil prices providing some support. Going into the next workday, here are the major factors traders should keep an eye on. US durable goods orders, March 25, a stronger-than-expected print could boost the dollar, while a weak number might reinforce rate cut expectations. Fed speakers, multiple Fed officials are scheduled to speak. Any shift in tone regarding monetary policy could spark volatility. Geopolitical developments, tensions in Eastern Europe and the Middle East remain a risk factor. Any unexpected escalation could drive safe haven flows. Asian market reaction, the yen's performance will be critical, as Japan's finance ministry has hinted at possible intervention if volatility spikes. So, what's likely to happen when markets reopen? Euro to US dollar, expect resistance near 1.0800 with support at 1.0750. If US data remains strong, the euro could struggle further. Pound sterling to US dollar, a break below 1.2600 could open the door for more downside. Watch for UK economic data early in the session. US dollar to Japanese yen, bulls will likely test the 151.50 level. Any signs of BOJ intervention could lead to a sharp reversal. Australian dollar to US dollar, watch for support at 0.6550. If risk appetite improves, a bounce could take it back towards 0.6600. US dollar to Canadian dollar, oil prices will be key. If crude stabilizes, the loonie may hold its ground. Before we wrap up, let's remember, markets don't move in straight lines. Stay adaptable, manage your risk, and keep an eye on economic data and central bank comments. If you found today's episode helpful, don't forget to hit that subscribe button and share this podcast with fellow traders. We'll be back with more updates, so stay tuned. Until next time, trade smart, stay informed, and let the markets work for you.